It's inflation day. Here's what you need to know before the bell. This morning at 7:30, the inflation number will be reported, and the big question is will it be too hot, will it be too cold, or will it be just right? Because that's going to be moving the markets. Over the last really 3 weeks or so, markets have gone nowhere. We've really just been stuck in a very tight consolidation range above this 50-day moving average, which is actually kind of bullish at this point. But what's going to be setting up the move of the market today is if that inflation number comes in right around 5%, which is where we were last month, the expectation is basically for a very minimal move in the markets. Now, if that number comes in above that number, above say 5.5%, we could see a decline of roughly 1.5% in the market today, because again, that would certainly put the Fed on edge that they might have to continue hiking rates. Remember, they said at the FOMC meeting that they will be looking at incoming data. Well, inflation is one piece of that incoming data, and a much stronger inflation number would certainly lead to concerns in the market about further rate hikes. And again, remember, the markets have been rallying on the hopes of a Fed pause or a Fed pivot, even more, of actually cutting rates. That's where the upside potentially comes in. If the number comes in below 4.5% this morning, we could see a move of up to 1.25% or so in the market, because of that idea that inflation is falling much quicker than expected and the Fed would have to cut rates. These two outliers are very low probability events. There's about a 50% expectation right now that 5% will be the number this morning. So again, markets may not move a whole lot on this number. It'll really be the core. When people dig into the core CPI and potentially core CPI less housing, which is what one of the areas that the Fed actually looks at pretty closely, that's going to be really what's kind of moving markets today. So again, we've got a lot of potential outcomes. The big number here, though, is really just watching the market itself. We've been in this kind of very tight consolidation range over the last several weeks. And in fact, going back to the October lows, we have a very defined wedge that is now being built in the market. So the market is close to making a decision in one direction or the other. Much of that will be driven by economic data, the Fed, of course, and what happens in this market over the next few weeks as we now exit earnings season. But again, a breakout to the upside of this range is going to give us a good move higher. A break to the downside potentially retest these lows from December at least. So again, there is risk to the downside. We need to be paying attention to that. And as we move into the summer months, be sure and raise a little bit of cash, kind of rebalance risk accordingly until we get a better determination from the market which direction we're heading in next. I'm your host, Lance Roberts, and that's what you need to know before the bell.